Okay, cool. I guess for the first question here, this is genmaicha. So it's toasted rice with green tea. And I got this from Japan. So it's one of my morning things is tea. Um, I'll say like most of the partners at KV, include myself included, are fairly well, how do we connect with me? We're fairly promiscuous in terms of like startups that we'll talk to and things that we'll dig into. So emails are generally open. Warm intros are always the best, but like LinkedIn responses, um, honestly, like Twitter, anything kind of gets our attention is something we'll dig into. Um, this might actually be helpful for most people, but I think in the job of venture, something I didn't really expect when I started this is you get a lot of inbound. So a lot of it's just like sorting what you can actually take a look at. So what you really want to do is try to get the attention of a venture investor with whatever opening line you have and whatever medium you're trying to actually go connect with them. So I think the way this is supposed to work, at least what Startup Grind told me, you just put your questions, type your questions into the chat. I see. Cool. So first question here, uh, where's the focus, SLMs or infra? I'm not quite sure what that question means. Like, they're not really distinct categories, right? Small language models is like a form of infrastructure. So usually it's some kind of either infrastructure breakthrough or research modeling breakthrough that allows you to do SLMs that are on kind of the level of frontier models in some aspect. So they're not really like competing categories. They're just distinct areas, or one's kind of a subset of the other. So from James, capital's flowing fast but highly concentrated. So what advice is there for early stage founders trying to raise in today's environments, and what are the red flags? Um, so it depends on how early stage you are. So in general, like the typical stages kind of follow pre-seed, where really it's a bet on the founders. So you want to be able to attract people by knowledge of the market that you plan to actually tackle, and also strength of the team for tackling that area. And the real red flags is not thinking deeply about an area that you plan to go after, not understanding the technology that's required, or just not having a great thesis on like why you guys and why this particular team. As you get further and further into things in later stage, the one thing I see most founders trip up on is effectively not having a reason why, not in the 1 year arc, but in like the 5 year arc, this company still exists, or this company actually has a right to win. Or just like having all of those questions answered, but not being in a big enough market where the outcome really matters to a venture investor. So from Arvind, um, developing an AI strategy agent and getting a lot of pushback versus ChatGPT. So what could distinguish strategy versus gen purpose? So this is kind of the question I get a lot, which is like, or actually a lot of VCs are getting, which is like, what's a GPT wrapper versus like, what's ChatGPT? So what market does OpenAI actually own versus what market can you actually take? And the answer here is actually quite simple. You can throw out the thinking of GPT wrappers or anything else, and like in the history of the world of all companies, there are moats, and these moats have like there might be new ones, but the old ones always still work. You have network effects with like virality. You have things like workflow lock-in. You have data gravity. Those still work today. So if you're building a GPT wrapper, as long as you can get to a moat fast enough, I think you're fine. And that's kind of what you should be looking for. Let's see. New model architectures that are emerging. So this is I'll say like if you follow the academic research papers, there have been a few attempts at new model architectures outside of transformers. One that's particularly interesting to me is symbolic logic models, but diffusion models for LLMs and SSMs have also been really interesting. I think none of these have been widely adopted yet, but in a lot of cases, what we're looking for is what's the killer use case where this actually beats transformers. And if you have I would, if you actually have an approach that's a non-transformer based model where you think there's a killer use case, I would actually love to chat with you because this is an area that we're actively looking at. So let's see, from Saju, big market countries. We don't really, so we're a multi-stage firm, so we don't really cut out like any particular market. So for example, there's not like you work in a country and therefore we're not going to look at that company. The only exception that we have here are we do invest in things that are defense tech companies. So we do try to avoid areas, for example, China, where a lot of our defense tech companies would have issue with us working with those types of companies. And in the same way, we do try to avoid like LP capital from questionable sources where that would actually hinder our ability to invest in defense tech companies. Let's see. Mutembe, my take on edge AI and orchestration at scale kernel engine level supports. So I can say at a high level, edge AI, so the edge has always been valuable. I think the question here is where's the arc of technology? So models will get better and they will get better quickly. And models will also get smaller. And in the vast majority of use cases on the edge, you don't need AGI level capability. You need to be very good at a subset of tasks. So the question that you need to answer when thinking about edge AI is, why is this a particular market that's large enough that I can take, where 3 years down the line, OpenAI just gives away its old models for free, and those old models are actually quite small and work on the edge. So those are the questions that kind of need to be answered, which it actually comes back to the moats question, which is like, so I'm seeing a lot of questions here about the moats. Generally, the way that I like to think about technology, and I'm like a nerd at the end of the day, so I like technology, and that's usually what gets me interested in a company to begin with. But technology always erodes over time. And the classic example of this is actually OpenAI. OpenAI is like quite hard. LLMs, like training a foundation model is quite challenging. And I would have thought they had a longer moat from the tech, but that lasted like 1 year. So technology moats are short term. And the question is actually, how do you take that technology moat, whether it's 1 year, 6 months, 5 years, 10 years, and leverage it into some advantage that other people can't catch you on? One of the most powerful types, and in the fullness of time, most successful companies reach, is a marketing flywheel, which is everybody knows you solve this problem and you're the best at it. So everybody comes to you first and your CAC is lower. And therefore you can pump more marketing dollars out there and then get more customers and the whole flywheel keeps turning. But there's other ones, like I mentioned, data gravity. Facebook very much has a social network effect. There's open source community that a lot of infrastructure companies do. So you just have to find the one that works for your particular business and your particular company. Let's see, what percentage of investment allocation is for non-AI? So we actually don't really think about things in terms of like AI or not. We have a healthcare arm, we have a clean tech arm, we have an enterprise arm. AI just happens to be like the technology du jour that a lot of companies are utilizing to find their edge for good reason. But if there's like a valid virtual reality company or like something that is quantum computing. That quantum computing is actually kind of interesting from the standpoint that this is like a research breakthrough. So like if we think there is something that looks like there actually can be a research breakthrough, we will invest in it. It's not like a percentage by percentage investment allocation kind of thing. It's just like, what are great businesses that make sense? And then let's invest in those. So in terms of AI infrastructure, how that's actually been exploding, like compute, data, energy, major constraints and investment opportunities. I think the way to think about this, so actually in the arc of platform shifts, right? The same thing always happens. So either there is some new piece of technology at the infra level that enables an application layer to happen, or there's new use cases and applications that have different operating patterns or different access patterns where current infrastructure down the stack underneath don't support well. And then there's a rush to go build new pieces of lower down the stack that support these new applications. So like a great example of this is mobile. When mobile became really, really popular, you actually had a whole glut of like mobile analytics companies, mobile testing, etc. show up because the infra layer underneath that was for desktop was not quite as effective as it could be for the mobile world. You saw this in the internet era. Like when the internet showed up, packet switching net routers became a thing. And therefore, companies started creating packet switching routers, and you actually had new areas of infrastructure that could occur. So AI is kind of the same way. Like ChatGPT kicked off this AI wave. Transformers-based models are now a thing. So when you look at where the opportunity is, there's a question, right? Like when you look at chips, are transformers the end-all be-all? So if they are, you would expect chips that are specific to transformers, like taped out with the transformers models exactly on the chip, to actually be much more effective for those use cases. And that gives you an opening potentially to create a company versus like a GPU is more general purpose. So there are companies out there. One of the most famous is one called Etch that are building transformers-based chips, right? Now, with so many different types of chips and so many GPUs out there, data center build-outs have to happen. And data centers are actually under a lot of constraints. So there's actually two things that happen here. One is like, is there new data center technology that you can actually invest in? And there's been a lot of interesting companies tackling that space. But the other is just like, there's like physical constraints to building things in the real world. So is there new technology in the construction area that actually helps you build data centers or helps you purchase land for data centers? And those have also been building out too. Energy generation is the same thing. Like this was something that actually blew my mind. We're invested in a company called Commonwealth Fusion that many of you might know about, which tries to do fusion energy. And like, yes, LLMs are very, very compute hungry and very energy hungry, and therefore we're going to need a lot more energy to actually go solve this problem. One solution to here is nuclear fission, but nuclear fusion is another one. And Commonwealth Fusion actually has like a working fusion reactor. It's just like not cost efficient, but like the fact that the tokamak kind of like spins and actually works, kind of mind blowing to me. I'm not like a physicist, so I don't actually know how it works underneath. But the fact that like people are even thinking about these things and building these, it's just kind of amazing. From a Biram, where to focus in AI, I actually think that's the wrong question to ask. Generally, if you're starting a company, you don't want to do it for the sake of starting a company. You want to do it because you're solving a problem that's really, really challenging and really interesting to you. So I would actually just think about like, it's two dimensions here. One is, what am I just really curious about and really interested about? And if it's AI or some subset of AI, then like I noodle on that and push on the edge and just see if there's something that I see here that other people don't. And then you think about like, can a company be built there? And is a company actually the right way to go address that particular problem? The second thing I would think about is, who am I ending up working with, both from the customer standpoint as well as like people on my team, and do I actually like them and are they fun? Because at the end of the day, these are a grind, right? Like this event is called Startup Grind, but these things are a grind. And you have to really enjoy the process and really enjoy serving your customer as well as working with your team to actually get through it all. And I think a lot of entrepreneurs today forget that step and don't think about that step. And then 1 or 2 years in, they kind of rethink whether or not they should be playing in this market or rethink whether or not this should be the right team. So that's actually the way I would think about it, is not like where's the best place to put focus, because that really depends on who you are and what you're interested in. Open source foundation models versus proprietary models. So this is a hard question to answer, and it's a great one. It's actually one that a lot of people should be thinking about. And I'll say, like, in the long arc of history of open source, there are very, very few examples of open source actually being the best piece of technology out there on the frontier, unless it is sponsored by a for-profit company. So in the world of like pure academic open source models, they will probably continue to get better and they will probably solve a class of use cases, but they will not be the best and they will not be the frontier models. Now, of course, there's people that ship open source models like Mistral, or DeepSeek is open source. So then there's like for-profit funded open source models versus the frontier labs. And I will say that that is an open question long term, who actually has the better models. And that really depends, I think, on who has the best data and who has the best talent. Um, so if you're looking at the frontier and looking at what you can actually accomplish at the frontier, that's what I would think about in terms of, on the 2-year horizon at least, who's going to have the best at the frontier. That being said, if you're looking at like which LLMs have a thriving ecosystem and exist long term or win the mindshare of the market long term, I would actually say the biggest signal here is marketing flywheel. Like if you go to New York City and you take 5 random people off the street, and you ask them, have you heard of ChatGPT? 5 out of 5 have heard of ChatGPT. If you ask them if they know what Claude is, it's like 1 out of 5, maybe a little more, maybe a little less. So there is like an advantage there that OpenAI has in terms of just pure marketing flywheel. I will say though, in the US at least, people do underestimate open source models. If you look at vision, like the Chinese models are actually quite good, and Chinese research on computer vision has been better than a lot of US research for over a year, almost 2 years. Language, the US still leads, but open source models are quite good and should not be underestimated. Okay, so Bia has a question about AI infra being capital heavy because there's GPUs and data centers and whatnot. So how do you think about fundraising strategy? So I don't really like or subscribe to the typical advice that people give about like raise for 18 months of runway and whatnot, and like figure all of that out. If you put money aside and you just think about a company is actually an arc with a set of risk. And at any point in time, you check off a major risk, that is an opportunity to raise because your company has gotten more valuable. Now, you don't have to raise at that point in time, but like one like very contrived example here, because everybody knows this, is like Facebook, right? Maybe the first risk is like, can you build the thing? And then the second risk is like, when you ship the thing, do people actually use it? And then the third one is like, does that network effect start to spiral, and is virality factor greater than 1, right? But at every point in time, one of those risks is where you can raise. So what you should actually be doing is thinking about, what are the risk points on the arc of my company up till IPO? And then at the next risk point, how much money do I actually need to raise to get there? And that's your minimum bar. You have to raise that much that you have de-risked something and checked off a box such that your company has become more valuable and you are more likely to achieve the final vision that you actually set out to achieve. And like, this is bad for VCs. From a founder perspective, the way I would think about it is like, what is the minimum of dilution I need to take to get to the next risk point where I can raise? So yes, infra is capital heavy. Yes, you may need to raise more than other companies to get to the next risk point. But that's actually what I would think about is like, how much dilution does it take me to get to risk point A? Or like, can I raise enough to skip risk point A and go to risk point B, right? And then keep moving forward from there. Let's see, are we investing in verticals or horizontals? So we do both. I think the question of a vertical or horizontal really comes down to the industry and whether or not that particular industry has enough idiosyncrasies that one level above on the horizontal won't actually solve for it. And like vertical AI is this like statement that I don't really love either, because like if you look at coding agents, great, coding agents might be a vertical, but then there's like folks that would pitch me like, oh, I'm doing like a COBOL agent. And it's like, all right, a COBOL agent, is that a vertical or is that just like coding, right? So it really just depends on, in that particular niche or that particular market, are you delivering significantly more value than one layer up such that you can actually dominate that niche? And then James, for like the bench press behind me, how you get one is basically over pandemic, you work at a nice company like Facebook that gives you a stipend to get one for free. Small language models on premise. So I think there's many use cases for small language models. On-prem is actually, so on-prem always comes with its trade-offs. It's always harder to actually go support something on-premise. It always is much more capital intensive to go run your own cluster and like manage on-premise models, and also requires a lot more expertise because like inference is actually quite hard, right? So I think when you think about small language models or on-premise models, the question becomes a security question. And there are going to be areas where this is quite important. Very regulated industries, defense, etc. What I'm interested in here is, what are the industries that are large enough and are lasting, that don't like erode over time, where on-premise models can actually support things? And I haven't found very many, to be honest. The only hypothesis I have is defense actually does have a use for this, but there's very few people that are both technical enough to have great inference to run things on premise, and also have like the shape of founder that would handle something in defense. And really, like when I say defense, it almost always really just means US defense, because the US is like the vast majority of worldwide defense spending. From Sukendra, data or distribution. So at being a moat. So this is like, again, another hard question to answer because it very much just depends. Data moats can be powerful, but there are traps that people fall into with data moats. So like if you can capture 100% of a data set that nobody else has access to, for example, Twitter or like X and XAI have proprietary access to Twitter's data, and that is actually quite valuable and can be a moat for Grok. But if you are like trying to capture, if there's like some market that has a certain amount of data and trying to create a data moat, what happens in a lot of cases is you capture like this subset of the market and you get a data moat here, but then your competitor sees like, hey, this is kind of an interesting data moat forming. So they go out and they capture this part of the market, right? And like now you have two data moats on the same area of data. And now your moat is weaker. So really like the key for data moats being powerful is it has to be proprietary. Now, and distribution itself is kind of a moat, but that one comes back to marketing flywheel. So that has to be like, I serve customers, I do a good job, customers love me, and they organically talk about me, and my CAC is lower. That in a lot of cases is the most powerful, but you can completely destroy a distribution moat with a data moat if the data moat is powerful enough. So it just depends on the application. Zuck paying people 100 million. Well, one, I don't believe he's paying people 100 million. Like that one is a story that has been so misconstrued. Like Zuck asking someone what would it take to actually hire you and them giving an answer being construed as an actual offer, like that's not an offer. But yes, Zuck is probably giving insane offers to go hire researchers. And I think the answer to that question just showed up yesterday with Sora 2. So OpenAI is effectively shipping a social network TikTok type of thing on Sora. So what's Zuck paying people to do? He's paying people to protect a $1 trillion company called Facebook from not losing its markets. And I don't know, like, would you spend 100 billion to make sure your $1 trillion basket is safe? Like, yes, very much so. It was great doing this, guys. We'll see everybody back on the main stage.